And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures family and friends. It is time for the market prep. April the 11th, Tuesday. My name is John Hoagland. Thanks for trusting me with your time. Hopefully, if you're in the market, things are going your way already, although our equities pretty much kind of keeping things close to settlement in the anticipation of tomorrow's CPI number. Always focusing on context, risk management, and patience here on the market prep. Geez, excuse me. My goodness. We get all ready and I get a little tickle in my throat. My apologies. So, economic numbers this morning. 6 a.m., the Small Business Optimism Index comes out a little bit higher. Red Book came out at 755. 10:30 today, Janet Yellen's going to be yelling. 12:30, Goolsby's going to be speaking, another Fed member. And at 3:30, the API crude stocks number due out. So no major economic numbers until tomorrow morning when that CPI number comes out. That should be a doozy. We're going to be watching. We do have a couple of earnings out this morning. Albertsons is beating on both, and mixed outcomes for CarMax. So U.S. stocks, at least stock index futures, set to open sharply steady, all of them within a handful or so of ticks from settlement from yesterday. Of course, preparing for 2 days of inflation data, the CPI tomorrow and the PPI on Thursday. Bitcoin is in the news this morning, finally getting back above 30,000 for the first time since last June, as apparently some recent scares in banking have led investors to less traditional investments. Crude prices are testing the low of the recent balance awaiting this week's inventory data. There may be opportunity in crude oil this morning. We're going to take a look at that in the charts very shortly. As far as the VIX, the dollar index, and the yield on the 10-year VIX is up slightly at 1914, but lower than yesterday at this time. Yesterday at this time, it was 1989. The dollar down slightly this morning. Yesterday, it was 102.52. This morning, 102.17. And the yield on the 10-year lower this morning, but still higher than it was at this point yesterday. Currently 3.4%, where it was 3.36% at this time yesterday. As always, I ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are all welcome here on the Market Prep. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Today is Tuesday. It's the early session of Make Hoag Money. Right after the prep, we'll go right into Make Hoag Money, see if you guys can make me a little bit of cash. Always a good time, and I always look forward to it. Now, there were a couple of questions I've read already. Make Hoag Money is going to be 4 days in the mornings, and we have been working on changing a few things for the market prep. Those will be coming up shortly. As everything, things take a little bit of time to get prepared, and we are working diligently on making some, I think, really positive changes towards the market prep and beyond. As far as the market, the reflection, I did not do the reflection yesterday. We had Make Hoag Money, and it, kind of went into 3 o'clock, and I thought, I thought that was pretty good. But I will be doing a reflection today. Haggle Matters, thank you for asking. And, if this is something that you want, you got to let us know. We're going to be expanding our, production here in the mornings. But if you still want the reflection, I'm more than willing to do it. Just have to let me know. Of course, your feedback is how we grow everything here at Top Step, including the opportunities to spend more time with you on YouTube and then Zoom meetings. So I put the link in for Make Hogue Money. If you want to join the Zoom meeting, you're more than welcome to. You can always watch it on YouTube live as well. There is a slight delay on YouTube. It's about 10 seconds, 10, 12 seconds, something like that. So it's all up to you how you want to do it. So again, this morning, equities pretty much flat. Crude oil pretty much flat, but in an interesting level. We're going to take a look again. We're going to take a look and see who's here this morning. We got Shaw. Good morning. Happy Tuesday to you. And yes, Make Hogue Money is going to start four mornings per week in April, probably. We're trying to get things all set up so we can get off to a good start. Jay, good morning, my brother Tom. Good morning, Rick. Good morning, my brothers. I love you very much. If you didn't know, I guess today is Siblings Day. It's also our sister's birthday. Happy birthday, Judy, and in heaven. And we'll be, of course, saying a prayer for everybody. Grounds Hero, good morning. Henry, Timothy, Pete, Data F Trading, good morning. Haggle Matters, good morning. Brian, Will, Robert, Alejandro, the Rooster, John Pakulis, Tim, good morning. Bill, John, Terry King, Dan Trader, Taurus Trader, Guten Morgen. Das Wetter ist schön. Beautiful day out there today, at least here. Hopefully it is by you. Sarah Hall, good morning. Prayers and love to you as always. Andy Bleed, George Duque, good morning. JD, haven't seen you in a while, George Duque. It's good to see you. Travis, good morning. Joe, good morning and peace to you. Market, family, and friends. There you go. That's what we're doing here, right? Maybe we should call it that. Jason, I'm for reals. Beautiful dump into the 2-hour SMA for a bounce back to VWAP. Should have picked up more contracts. Well, it's one of my dad's wisdoms. Whenever the market goes your way, you'll never have enough on. When it goes against you, you'll always have too much on. I'm for reals. Good morning, Rob T. and Nisa Gnostic, Rusty Golfer, Steven, Alfred, Don, Michael, good morning. Ron Merlot is back with us. Good morning, Mr. Merlot. Stephen, Koss. Koss, the market reflection is the one I like throughout the day. Recap the entire day. Well, all right, Koss, thank you. And a couple of people mentioned that now. I've been consistent that I think the reflection is helpful, so I'm all for it. Thank you very much. Thank you. And John also agreeing for the market reflection. Well, we'll be doing it today. Probably I'll do it tomorrow too after Make Hogue Money, and then Thursday, of course, they do the podcast, and then nothing after the market prep on Fridays. So Taurus, it wouldn't be awesome, or it would be awesome to find time in the end of the week to reflect on how we performed during Make Hogue Money. And what changes we could work to improve on the next week. I think that's a very interesting and good idea. I know that there's a trade report on Make Hogue Money, and we can certainly think about adding that to the things that we're thinking about doing. I think that's a good idea. Good morning, Jerry is awake, Trading Research. Jason, good morning. Scott Saw. Denise, good morning. Rusty Golfer. We could reflect before the start each morning. That would save you time. We don't want you, you're going to burn me out. This is what I love to do. I really feel very lucky to have the opportunity to be in the seat that I'm in, to be able to spend time and talking to traders about trading, doing my own trading. This is what I would be doing even if I didn't have to, or I didn't want to. I mean, this is what I want to do. I feel, again, very blessed and lucky to be able to spend time with all of you and to do what I do. So we are going to jump into the charts here. Good morning, Gunga Den. Good morning, and Nico. And thank you very much, Dan. It's very kind of you to say. And it's one of my favorite t-shirts is be kind, right? Okay, and be kind to yourself too. Let's take a look at the charts now. This is the daily in the S&Ps. The way I'm looking at this market is it's been in balance for now 6 straight days. We added 1,900 in open interest yesterday. Overall, open interest increases have been somewhat mixed. It's been waffling back and forth between gains and losses, but gaining open interest overall. Good morning, George. So we've got the market really centrally located. This market is, I think, just very prepared for whatever's going to happen for CPI tomorrow. Now, when that number comes out, if you can, look at the dome. Look at how illiquid this market is going to be when that number comes out. It is going to be a fast whipsaw. It is going to be vicious. It is going to be dangerous. I will not be playing it until I find something as the day goes on that offers me the opportunity to limit risk. We never know. It could end up being a big nothing burger, but I doubt it. There's a lot of anticipation about the CPI number coming out. Do you think this market is expecting it? It's range bound. It's in the middle of the range. It's like a little tennis player coming back to the center of the court so that it can reach the next volley, whether the volley goes up or down. Look at the volume yesterday. Volume was very slow, even in the New York Stock Exchange. It was just under 3.3 billion shares traded. So a lot of folks are already hedged. They're already positioned for whatever happens tomorrow and on Thursday. So what does that mean for us today? Well, I'm going to take a look at the 30-minute chart here. Now, we did have an up day with an increase in open interest. Another up day here, which I think had another increase in open interest on the 6th. Yeah, that was a 20,000 contract increase in open interest. We have an estimated 19,000 contract increase in open interest. We've had delta congruent, so it doesn't say that it's longer time frame traders. This may just be longer time frame speculators placing hedges. Whatever it is, we've seen open interest increase on up days, but volume has not followed suit. Yesterday, we had a low to high day. It's a double distribution trend day. What about the overnight? Our overnight is maybe a little bit short, just mixed, maybe even just flat. But what do we have? We had a late spike the end of the day yesterday. In other words, price continued to push higher at the end of the day without the ability of time to prove acceptance of higher pricing. So when we have a late spike, this is what it looks like on the profiles. So we had a double distribution trend day, a distribution of time and volume here, a distribution of time and volume here, and then we extended the range at the end of the day and we closed up near the high here, 41.36 quarter is settlement. So we closed up here. Well, when we open in or above a late spike, it is time marking acceptance of higher pricing. We look for opportunities to go long. Look at our overnight low. The base of this late spike is 41.33 quarter. That's that last little that first little extension on the TPOs here. Nothing is finite in futures trading. It seems that there's a reason that price ended up stopping on this push to the downside here. If we open in the late spike, it's a higher probability of acceptance of higher pricing. We open flat out above a late spike, it's a higher probability of acceptance of higher pricing. None of this means that price will just go. There's always the possible pullback. We may test down to the overnight low and the base of the late spike. We may test down to where the late spike began, which is down here at 41.2650 or 75, whatever that is. So with the market where it is now, if we were to open, I would say I would be looking for opportunities to buy weakness in this market. But why Why the late spike yesterday? Why, with the CPI coming out tomorrow, should we be too excited about anything? Well, if I had to be excited about any of the nuances in the S&Ps today, it's the fact that we have this late spike. It might be a pretty interesting make-home money this morning. You may want to come. So again, the late spike, the IB low yesterday, low of the session, range continuation, range continuation. We'll see how that plays out today on make-home money. Now, crude oil. Looking at things this morning, when I first looked at this market, it was sitting right at 79.60, which is a weekly kickoff low. It's the kind of lower extreme of the area of balance that we've been in 1, 2, 3, 4, 5 days. This is kind of a pivotal area for me. Now, yesterday on low volume, we lost 13,000 in open interest. Long liquidation. It's the first loss in open interest that we've seen since the 30th of March. Higher open interest, higher open interest, higher open interest, higher open interest, and a loss. Maybe this loss is just a pullback. Maybe it's just some long liquidation, which is quite possible. Long liquidation takes selling power away from the market. So my focus today in the regular trading hour session, which just opened up, is 79.60. If we're going to hold above it, I'm looking for opportunities to buy weakness for a return back into range-bound trade. There's a difference, and this is what we're going to be doing on the coach's playbook today. The difference in strategies between range-bound trade and trending trade. Range-bound trade is you buy the low, you sell the high. You buy the low, you sell the high. You do so ad nauseum until there is an accepted break outside of balance, which could create a new market state or a trending market state, which you go with. So what I'm looking for at 79.60 is acceptance below that. So far, we're seeing rejection. So now the play is near the low of balance, we're looking to buy so we can limit risk. Near the high of balance, we're looking to sell so we can limit risk. Anything in the middle is going to be somewhat random. Take a look at the 30-minute chart here. So here's our low of the extreme here. We've got the value low for the entire session up here now below us. We're showing signs of rejection in regular trading hours at weekly kickoff low. We're going to see this market probably continue to rotate higher. I may be able to actually say that the opening range is the low of the session again here today. Yesterday it was the low of the session until late when we extended the range to the downside. Here's the opening range. It's the low of the day. So for now, I'm looking for opportunities to buy weakness. We've rejected below that weekly kickoff low in regular trading hours. Yesterday, chop pretty much from high to low, low to high. Most of the day was inside value in the longer time frame. Okay, this is the volume profile for this entire range since we popped up here a week ago Monday, a week ago yesterday. Now we're right in the middle of it. Stay patient. The upper extreme, probably somewhere up here. The lower extreme, obviously, 79.60, 79.50, 79.40. This was in the overnight. We haven't traded outside of this level in regular trading hours since we came up to this level. That's why it's so important. So we're seeing the market continue and returning back to range-bound trade. Apparently, at least not now, are we going to get the breakout below this area of balance that I was kind of hoping for. Here's the TPO chart. Almost sort of a late spike, except we didn't close down there. 79.74 right there. We closed really relatively close to the late spike. We opened in the late spike and rejected it. Just the fact that we opened in this, there may be an inherent weakness to this. So I'm really going to be watching this 79.60 level, yesterday's low, regular trading hour low, and pretty much our low from today. IB, neither the high nor the low. Normal variation trading day extreme to the downside with a loss of open interest. But that loss of open interest in this situation takes selling power away from the marketplace. NASDAQ, a little different situation here than the S&Ps. It's 4 days now I'm calling in balance. We were kind of pulling back. Now we got 4 days in balance. And again, very similar. Very low volume yesterday, centrally located between the high from last week and the low from last week, centrally located between weekly kickoff high and weekly kickoff low. These markets are just sitting here in anticipation of new information. We did add open interest yesterday, 4,200, maybe some new longs off last week's low. But look at where we are. I mean, we're just hanging around here. Then what about the TPO? What about the 30-minute chart? Well, it looks like we're going to be opening in range and in value, and there is no late spike. So opening in range and in value, I'm going to try and stay patient. A little bit different nuance here than in the S&Ps with the late spike. NASDAQ not presenting as strong. Well, it hasn't been since we popped up to this area. How about the TPO chart? Double distribution trend day. No real late spike. 13,158 was settlement, which is down here, which leaves a potential late spike in the NASDAQ as low excess. We're opening in range and in value. We're opening potentially in an area that would bode for repair between this distribution and this distribution. So much different pictures here on the NASDAQ and the S&Ps. Just thinking here. IB low, double distribution. Boy, it's going to be... It just reminds me, friends and family here, that if you're trading the NASDAQ, focus on the NASDAQ. There are correlations, but the real market-generated information in the NASDAQ that you're going to get is coming from the NASDAQ. If you're trading S&Ps, focus on the S&Ps. The real market-generated information that you're going to be getting is from the S&Ps. The nuance right now, if we were to open in the late spike, indicates potential acceptance of higher pricing. The market can come back down and test levels below, but at the end of the day, we'll see what happens. And we will do a reflection today for sure. Let's take a quick look at gold now. So we're still holding upside structure. We've got all these points of contact, one anomaly through that level, point of contact yesterday, point of contact today. Volume is cutting off, maybe in anticipation for whatever happens tomorrow, but we do have upside structure holding on. What's the grade for the upside? I'm going with a C+. Weak longs exited this market yesterday. We lost about 2,600 in open interest on a test down to this trend line. Volume very slow. Volume is just cutting off. Looks like it may be pretty decent today, however. Here's the bull flag. Potentially, right? We've got lower highs. We've got lower lows. We got 1, 2, 3 points of contact here. 1, 2, 3 points of contact here. We're opening, or we did open, above this trend line. This trend line may end up actually being supportive We opened, I think somehow, we didn't open with a gap. I was hoping maybe we would. We've got a lot of overnight longs in this market. It would make sense for the overnight longs to bring price to levels that are friendlier for longs to buy. But again, we've got a lot of overnight longs in this market. Bull flag breakout, potentially. Here's the profile from yesterday. Excess high, excess low. IB the high. B shape indicating that longs liquidated yesterday. Now, longs liquidated yesterday. What does that do to the marketplace in an upside trend? It takes selling power away from the marketplace. Now, of course, anything can happen if there's a major technical change or something that comes out that can change things, of course. But trading what we're seeing, what I'm looking at here is potential repair to this point of control, potential repair to this point of control. We're right in the middle of it in an area that really hasn't exercised much opportunity to facilitate trade. So I'm going to be looking for this market to test to levels that have facilitated trade first before a major move is going to happen. IB is the high, excess low, normal variation day. Kind of extreme. Here's the center line. Here's our points of control. A little bit extreme. B shape, long liquidation. Keep that in mind. For the euro, the upside structure still remains. It does seem to be struggling a little bit. Yesterday, we had some naysayers come in here and add 57 in new shorts. New shorts are going to end up being buyers if they get squeezed. Look at how low volume was yesterday. Look at how much better it's going to be today, it seems. Pullback, I think, has trapped some shorts. Keep your eye on the dollar, of course. Here's the 30. Again, we've got another potential bull flag. Well, we would have accepted it yesterday, right? But we lost open interest we gained open interest. I'm sorry. We gained open interest, which leads me to believe we probably saw some shorts get stuck down here yesterday. This could be a potential breakout to the downside, but not now. We've got a lot of longs in this market. We've got a gap higher. We're testing the upper trend line. If we accept above this trend line, I would look for a larger move. If we accept above this trend line. If the longs from overnight start to get nervous and no new buying comes in, we could easily see this market pull back to this lower trend line. Look at the high yesterday, right on the trend line, right on it. We come up to it, we break above it in the overnight, we accept it over time in the regular trading hour session. The next move could be a breakout above this trend line. We could feasibly move this lower. I don't like to do that because there was obviously a break in the structure here because we did have 3 points of contact. The market traded right to it yesterday in regular trading hours and rejected it. Now it's back above it. Is it going to accept? Here's the TPO chart. All right. Gap. Back in range. IB high. Normal variation trading day. Neutral according to TPO. Point of control. Well, what do we do with gaps? If we can't close the gap relatively early, we look to go in the direction of the gap, which would have us looking for opportunities for longs. What about the 10-year? We got the yield a little bit higher than yesterday. Look at how volume has just been dying here. This market is, again, all of these markets, especially the equities, the treasuries, anything related to the dollar, just waiting for information. Look how centrally located price is. We got last week's high, we got last week's low. We got weekly kickoff low, we got weekly kickoff high. The market is our little tennis player waiting for the next volley on either side, lower or higher. We added 26,000 new shorts in this market yesterday, but look at the volume, just putrid, terrible volume, as long as this platform is presenting it correctly. So again, central location means short time frame control today. Do we see any big opportunities? The market has somewhat opened in range, in value, no overnight inventory to speak of. I'll be looking for opportunities as the day goes on. Perhaps our overnight high and overnight low could be interesting opportunities for us. Here's the TPO charts. Excess high, IB high, excess high, IB high. A little excess on the downside, inside range and value. Stay patient. Opportunities will come here. Overnight low, perhaps overnight high, or up here. 10 years a tough trade because there's always a weak high or a weak low somewhere within sight. And we'll take a look now at the natural gas. There may be a change here in the natural gas. We lost 7,900 on this bullish engulfing pattern. Volume was very strong. Short covering came into this market in a big way and put in a bullish pattern here. Big volume. Here's the 30-minute chart. So here's that move up yesterday. Here's the loss of open interest against Delta. Price moved higher. Delta negative. Longer time frame buyers covering shorts is what I'm thinking yesterday was. Now we've opened with a gap. We have come to close the gap. This gap, this level here may be supportive. And if we reaccept inside range from yesterday, a move to the low of value would be in order. Here's the TPO chart. B shape. However, losing open interest to the upside. Normal variation, neutral day, excess on the low. You don't even see that this is a bullish engulfing pattern, but what we do see is this late spike on Friday, swiftly and abruptly rejected. Price was too cheap down there. You keep an eye on this market today. There could be some interesting things to learn as I don't actively trade the natural gas market. So trading futures daily, this is just a sim account that I use on this computer for presentation. My personal trades go on a completely different computer that does not have anything else on it except trading information. This is the computer we'll be using here in just a few minutes for Make Hogue Money, which is another account of mine that I trust to all of you to help me find good opportunities in. So I look forward to seeing everybody there. Will I see your question here? Can we get a session that helps us set up these amazing charts? I and others have trouble maintaining our charts on Tradeovate. Even after they are correct, there are problems or they crash. See, this computer is pretty strong, and I don't really have too many problems of them crashing. But, Will, if you're going to come to JT, Trading Futures, yeah, you can send them that link. That would be great. Awesome. Get in Discord. You guys can help with that, sure. But this is just a kind of a sim account that we actually started Make Hogue Money on this account, and then we moved it to live. But yeah, I've got a couple of different computers. The main personal trading computer is a completely different setup. Anissa, my pleasure. All right, let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Don't forget to be kind to yourself, be kind to others. My Superman shirt. And trade well. If I don't see you for Make Hogue Money, I will see you for the Coach's Playbook. And I guarantee, if it's at all possible, that I will be doing a reflection at the end of the day today. And thank you for the feedback on that. So give me a couple of minutes. We'll get Make Hogue Money all set up, and I will see you there. Trade well today.